Now, warnings of turbulence from Singapore Airlines due to COVID-19 a day after reporting its first annual loss in its history. The airline isn't expecting passenger demand to return to normal in the near term. It's also cutting spending for this financial year. But there's a silver lining. Analysts say SIA is in a better position than other airlines once the recovery comes. Brandon Tenoto explains.
Fuel hedging losses and a plunge in air travel demand due to COVID-19 sent Singapore Airlines into its first annual loss in history. As oil prices have fallen globally due to the lack of demand, SIA is paying for higher fuel prices than what's sold on the market right now. The pandemic's also driven the carrier to cut capital spending by at least 12% from its previous plan, though the final reduction could change depending on how talks with plane makers over delivery delays pan out. In fact, regional rivals Cathay Pacific and Qantas are also looking to push back the delivery of new planes as they grapple with crippled demand. But it's not all doom and gloom for SIA. Though a rebound in the aviation sector is only expected from 2022, experts say SIA is already better positioned for the recovery compared to its peers. That's because it is raising $15 billion by issuing new shares to its existing shareholders. The government's been supporting the aviation sector here too, with a $750 million aid package SIA is set to benefit from. However, analysts warn that downsides still remain in the near term, and the carrier could do more as it plans ahead.
In terms of the cash on hand situation that SIA is in, I think it's certainly in a relatively good position that's going to help it last for a long time. But it may have to have a little bit of a longer wait for the general international travel to resume, but hopefully not too much, because within the region there's still a lot of pent-up demand and there's still a growing economy here, and that's certainly something that SIA with its group members can certainly tap into.
One way SIA can manage the cost structure is to target the routes that are most profitable, that are most cash generative as the lockdowns and the travel restrictions ease. These travel restrictions cannot last indefinitely. Already we are seeing the air corridor reopen in some places, and that would be an opportunity for Singapore Airlines to generate some cash flow in a very, very difficult setting.
For now, the efficacy of safe distancing on planes, according to SIA, is still undetermined, with discussions ongoing between airlines and authorities. As to whether airfares would increase because of these measures, SIA said it will adapt them as needed when it restarts its services. These health and sanitation concerns will be a focus for discussion in a new task force set up within SIA.
Shares of Singapore Airlines closed for the week at $3.90 Singapore dollars, and that's up by more than 2%.